Hey everyone, me Kevin here. One of the most hotly and anticipated reports is about to be live in about the next 50 seconds. It is the Consumer Price Index or inflation report. It comes out. The expectation right now is for a month-over-month read of an inflationary boost of 1.2%, which annualizes to about 14.4%. That is in excess of the 0.8% month-over-month speed or annualized rate of inflation that we had last month, or month-over-month inflation that we had last month, annualized to about 9.6%. We're expecting that number to be 1.2%. The year-over-year figure, that headline number that you're going to see on those newspapers, is expected to be 8.4%. And then probably the most critical number is the CPI X food and energy number. This is similar to your core inflation figure. It is expected to come in at 0.5%, half of a percent, exactly the same as last month, which would mean the same rate of inflation as last month when we strip out food and energy, which obviously has gone to the moon because of the Russia-Ukraine disaster. So let's take a look at what we got. We are waiting for the report live here. Obviously, a big miss here on CPI is going to be bad for markets. So this is going to be up here any second now. We're looking for that month-over-month figure here, looking for under 1.2. Okay, here it is. It comes in at a match at 1.2%. And wow, X food and energy. Actually, it's still not even up over here. I'm just getting it on the reader over here. Looks like we got a match at 1.2% on the month over month. Year over year was 8.5, slightly higher. But folks, X food and energy actually came in. I'm still not actually getting the feed coming through here on the BLS website here, but we got it on the tape here. This is incredible. X food and energy came in at 0.3%. This is way better than expected. Again, still not actually getting it to show up here on the BLS website. There we go. CPI. There we go. Okay, here's the actual CPI release. So let's go ahead and get this, and we'll go into the details of this. Give me one moment here while I pull this up. But this is actually much better than expected to see that core coming in at 0.3%. That's pretty good. Especially since, I mean, that's, again, stripping out food and energy. Those are going to be the very volatile categories, and obviously the ones that have been skyrocketing because of the food pressures, the wheat pressures, the gasoline and oil pressures or due to the Russia-Ukraine disaster. Remember the way they measure CPI, and we're going to have to look at this report to see housing in just a moment. Remember how they look at CPI is they take sort of a weekly kind of measure of the volatile categories. So if you have oil or natural gas, or let's just say gasoline for your car in this case, at a high or elevated level, they're going to take a snapshot 3 times a month, and then they'll take an average of that. So let's say if a barrel of oil was 95, 105, and 100, then CPI would show oil at 100. But again, stripping out this to get the core, stripping out food and energy, we've actually got a really good report here. So this is quite good news. So that month over month is absolutely what everybody's been looking at. Month over month coming again exactly at expected or at expectations, 1.2%. You can see that right here in March on a seasonally adjusted basis after rising 0.8% in February. We already knew that. This number, the headline number, did come in about 0.1% higher than expected. Not such a big deal, though. Really, the big winner right here, again, is this right here. The index for all items less food and energy rose 0.3% in March following the 0.5% increase in the prior month. This actually means that core inflation is going down despite food and gas going to the freaking moon. This right here could be all we need for a quarter basis point or quarter interest rate hike rather than a 50 basis point hike. So that's a pretty big deal right here. The shelter index was by far the biggest factor in the increase, with a broad set of other indices also contributing, including airline fares, household furnishings and operations, medical care, motor vehicle insurance. In contrast, the index for used cars and trucks fell 3.8% over the month. Look at that. Finally, that J-POW inflation is transitory is actually starting to pull the index down. I would imagine if you didn't have this negative in used cars and trucks, you would have had a big move up in that core there. So we'll look in just a moment at the tables, but that's really incredible. So here's an overview of the tables on this column right here that I've just highlighted. This is going to be your month over month increase in those categories, and then the outside over here is going to be your annual category here. So here you can see that energy is up 11% in a month. Fuel oil, 18%. Electricity's up 2.2%. This is in a month. But folks, look at this. This is actually incredible. Used cars and trucks down 3.8%. New vehicles only up 0.2%. Commodities, less food and energy, actually down 0.4%. This is actually really good. But look at this. You finally are starting to see this shelter inflation finally push up a little bit here. Still only sitting at an annual rate of 5%, which honestly is quite ridiculous. We know that shelter is substantially lagging the housing market. But it's interesting because you've kind of got this thing going on with rents. Because of the way they measure owners' equivalence rents and such. But you've kind of got this thing going on where home prices have really done this. And the Federal Reserve just about a week and a half ago came out and said, we're starting to see signs of euphoria in the real estate market where home prices are fundamentally escaping fundamental rents where they should be. And so you have this difference over here, and that is that escape of home prices from rents. So if you can now get rents to potentially, move up, where home prices potentially move down a little bit, you can kind of get back to that happy median. Anyway, so let's take a look more at this. Really, really incredible. Transportation services up 7.7% here, probably having to do with driver shortages. We'll see if we can get into a little bit more details here. But this is actually a very good report. I do want to take a very brief moment just to see how the NASDAQ is reacting to this. I have not looked yet, but I will tell you, look at this, folks. What did I tell you? This is something that we've been talking about for a while here. During this entire run, I've been saying, be careful while this run happens. What was I saying? I drew this triangle right here. I didn't move it on purpose. I drew this triangle because I said on March 23rd, this is when we drew the triangle, I said, don't be shocked that we end up getting some kind of drawdown to that 23.6 Fibonacci on the QQQ. Folks, it ended up coming right around April 1st. We got a couple drops, had a little green day there, and boom. Look at this. We're sitting right here today. Right now the QQQ is actually moving up nicely. We're up about 1.3%. Look at that. Oh my gosh, let's go. That's really, really good, folks. That's really good. If you were looking to buy the dip, this right here is by far an amazing buying signal. This is going to increase buying pressure. I do think that there was a huge lack of buying pressure going into the CPI report. The fact that the CPI report is coming in strong, really good, very, very, very excellent report. I don't like buying pre-market, but anyway, we knew this retrace was coming. We've been talking about it for weeks on the channel. If you don't have the pleasure yet of being a course member, make sure to use that coupon code Kevin Cyber linked down below and check out those programs on building your wealth and join me on those private live streams. Back from vacation, so we're back to live streams, which is fun. And of course, this video is brought to you by StreamYard. So if you're ever wondering how I do my live streams or how I could throw up comments like this that I've got on screen here, well, I do that with StreamYard. So go to mettkevin.com/StreamYard to learn more. Okay, so let's keep going with the CPI report here. Of course, used car prices are dropping. I just bought one, typical. Oh, Terry, sorry to hear that. But honestly, Terry, I think everybody has to thank you because right now, used car prices helping tank inflation are actually a very good thing for the market. So hopefully you're invested and you're getting recouped for that. So let's take a look at what else we got here. The food away from home index rose 0.3%, smaller increase than in recent months. That's very good. This is especially anything in food that indicates a smaller increase than in recent months. Come on, that is something to celebrate. That is very, very good. The food at home index, take a look at this. This is where you're getting hit, folks. This is a sign that the restaurants are hitting sort of a ceiling in terms of how quickly they can raise prices. Whereas in the grocery stores, they're like, no, we're going to charge you for the baguettes what we need to charge you for the baguettes. So in other words, you're paying for that wheat more because of what's happening in Russia and Ukraine, and of course, other commodities straight out of who are popular from Ukraine. The largest 12-month increase since the period in 1981. The index for meats, poultry, fish, and eggs increased 13% year over year, 13.7%. Beef up 16%. Absolutely incredible. So I want to see some more of the charts. Oh, yeah, look at this one. Here's another big one. The index for airline fares rose 10.7% in March. This is actually a really good, in my opinion, sort of leading indicator of how consumers are behaving. Are consumers still spending money? This is something that we want to pay attention to. And the fact that airfares were able to rise 10.7% in a market that is extremely competitive is a sign that consumers are still spending money. In fact, you have to look at the acquisition of a JetBlue and Spirit, or the offer by JetBlue to acquire Spirit, not as JetBlue trying to get into discounted airlines, but the fact that JetBlue will do anything to buy freaking airplanes right now. If you want to buy a plane right now, you're sitting in a queue waiting somewhere around 18 months for a brand new plane right now, potentially up to 24 months. Unless, of course, you're purchasing from Boeing, then they've got a bunch in inventory, but, Boeing has other issues. And so that could be a sign that you've actually got JetBlue indicating there's so much demand that we'll just buy a whole airline to maybe even potentially destroy that Spirit business model, which I'm not sure who's really celebrating Spirit's business model anyway. And nobody likes those small tray tables, okay? Can't even put a freaking iPad on them without falling over. But anyway, that would be an opportunity for them to get the planes. And so that kind of reiterates what we're seeing here in the CPI report of airfares going up 10.7% in March after rising 5.2% in February. Household furnishings rose 1% over that month. That still blows my mind. The fact that people are still spending money on household furniture, please freaking stop. I mean, you know what? Look, if you're not a viewer of the channel, fine, go buy more furniture. It's the stupidest investment. I mean, it's not even an investment. It's the stupidest butter you could spend your money on. But if it's dear rest of world, stop buying freaking furniture. It's so dumb. It's such a whatever. I think y'all know what I mean. Fine. If people want to keep spending money on furniture and wasting money, their problem. It actually helps us out to some degree because that translates into better earnings, right? But come on, don't buy furniture. This kind of market right now. Save your money. This is the kind of market to save money. Index for motor vehicle insurance increased 0.7%. Apparel rose 0.6%. See, that blows my mind as well. And I believe that apparel, and I've mentioned this before, companies like Nike, Lulu, and that, those are companies where we're going to see the initial signs of consumer pullbacks, not so much on those more premium priced products like Apple's or maybe Tesla's and such. And that's because I think you're going to hit that lower income demographic first with this style of inflation, because this inflation isn't really what's killing somebody who's making $150,000, $200,000, $250,000. It's kicking the butt of the folks making $30,000, $40,000, $50,000, $20,000, right? Okay, medical care index rose 0.5% in March. Index for physician services up 0.5%. That's a pretty decent increase there for physician services. That's an annualized rate about 6%, but that's also in line with kind of the overall inflation that we're expecting right now. Index for new vehicles 0.2%. We saw that. The index for used cars. This was such a good drawdown right here. Remember this this kind of fall in used cars and trucks, and we'll pull up the weightings, but I want to say the CPI weighting for this is somewhere around 7 or 8%. So it has a good substantial pull within a CPI to pull this down. Housing makes up about a third as well. Okay, index for all items less food and energy rose 6.5% over the past 12 months. Good. Okay, virtually all of its major components rising over the span. Sure, we know that the inflation's everywhere, but boy, oh boy, I have to say, much better than expected. This could have been terrible. And then we've got here the consumer price index for urban wage earners and clerical workers, CPIW. That rose 9.4%. Chain consumer price index for all consumers, 8.1%. Okay, so this is giving you kind of an increase of what various different workers might be facing in terms of inflation, and it's understandable that you're going to see more inflation amongst the lower income individuals. So I'm going to pull quickly here some more of these tables from the CPI report, but this is actually very, very good. I know it's hard to say that, like, oh my gosh, how could CPI at 8.5% coming in hotter than expected be a good thing? But it's really that month over month. And I said it before it even came out. That's exactly what the market was going to be looking at. And the market's jumping up and down on this right now. Well, I think we've pretty much gone through this. I'm just looking. I don't know that we really need to go nuts into the real particular details here. I mean, we'll take a very quick jump through here. We're going to look at the seasonal adjustment. So the most far right column is what we're going to look at here. And what I'm really going to look for are big increases. Like we're going to look at rice up 3.2%. Could be that substitute for wheat. Very interesting. That's a big move there on wheat. Beef, 2.1% uncooked, 2.4% on frankfurters. Just see if there's anything really that stands out here and anything that could give us clues for individuals' spending habits. Now, usually I like to get out of food Food, I think, is quite complicated here. I mean, look at these insane increases here for energy, right? So, it is here. These insane energy prices are here. That's why core, stripping out that food and energy, is such a big deal. All items less food and energy, 0.3%. I'll tell you, that number right there, that made this market green, and that could honestly set us off on a rally through the beginning of next month when we have the FOMC meeting. In my opinion, this lowers the chance again of a 50 basis point hike. Apparel 0.6%. Okay, household equipment. All right, let's see if we see anything here. Major appliances 2.8% there at the top right. That's interesting. Dishes and flatware 3.1. We got a few negatives popping up over here. Not too many. You've got men's shirts and sweaters coming at negative 0.7. That's kind of boring. All right, what do we got over here? Oh, that's interesting. Women's underwear, negative 2.4%. Oh, okay. All right, less people buying underwear, I guess. Boys and girls footwear, negative 1.5. Infants and toddler apparel, negative 1.5. So you're getting some of these negative reads here. Jewelry's all over the place, especially as a commodity. Used cars and trucks, obviously, huge one right there. Multiple negatives over here. Look at this. You've got motor vehicle parts and equipment's actually coming in negative 0.2%. That's great. Tires, negative 0.1%. Vehicle accessories other than tires, negative 0.3%. This is good. The more of these negatives we finally start seeing, the better. Look at that. TV's down 2.4%. Sorry, Roku. Still don't understand why you're trying to get in the TV business. Dumbest thing I've ever seen. But anyway, negative 0.6% for sporting goods. What do we got over here? Recreational reading materials down 2.9%, and newspapers and mags down 3.9%. A lot of negatives here where we haven't previously been seeing negatives either, which you could see in the prior months. Smartphones down 4.2%. Wonder if that's going to be a little bit of a tell there for Apple. Whiskey down about 0.8, but that just offsets last month. Let's see here. 3.7 for other lodging. Oh, yeah, this is always interesting, right? Shelter 0.5. 3.3% for lodging away from home. Holy smokes. Other lodging away from home. Hotels and motels, 3.7%. That's big. That's actually a really big increase there. And that, again, is a sign the consumer is still spending money. Okay. That's what the only thing that will prevent us from going into a recession, folks, is the consumer continuing to spend money here. And what we actually got in this report here is inflation going down core-wise. Great news. Great miss on core inflation. I mean, very, very excited about that. And the consumer's still spending. They're spending on traveling. They're spending on airfare. They're spending on hotels and motels. They're spending on experiences, but they're not spending on used cars anymore, and that's dragging the index down, which is absolutely phenomenal. Car and truck. Look at that, folks. Holy smokes! Car and truck rental up 11.7%. Oh my gosh. Again, a sign of people just spending money because they're going out. And this is recent data here. This is some of the first insight we're getting here into consumer spending for this next earnings season here. Although you do have a decline over here at admissions to sporting events of 5.9%. That's quite interesting. I wonder why. Maybe it's just like a seasonal thing there. But then again, that is the adjusted sector, so that's odd. Apparel services other than laundry and dry cleaning, 3.8%. Financial services, 2%. Quite interesting. I mean, look, fascinating report to me. Very, very happy about this. It's no surprise to me that as the market is digesting this, it continues to digest this positively. This is phenomenal news. Again, if you're looking for any opportunity to buy the dip, I think this is it. If you're looking to take advantage of the best price that we have on the programs on building your wealth, you can do that via that coupon code link down below. This video is brought to you by StreamYard, of course. And folks, congratulations. This is a great report if you're in the market. Congrats. This is excellent for the Federal Reserve as well. So thank you so much for being here. Really appreciate it. And Opzar here says this is disastrous, really. It's actually it is disastrous, but it is better than expected. So it's less disastrous than expected, which in this market is good news. Congratulations, and we'll see you in the next one. Bye.